guys, it's Nathan Birch here from B.Invested.com.au, and thank you very, very much for tuning into the YouTube video. And today what I'll be talking about is questions and answers asked by those on our Facebook community with the Facebook link below. Basically, I found it a bit awkward to get back to everyone's emails personally, so what I thought is it's important to get people to ask questions through. I'll answer them on a weekly YouTube video and hopefully deliver more content to everyone so they can get further insight on how to improve their property portfolio and make money. So today we've got an email here from Scott from Facebook, and it says, what is the biggest hurdle in replicating your level of success today? Finding good deals, getting big finance, and lien tax issue, and doing renovations at a reasonable price. And those questions there, really good questions. A lot of people seem to think that Nathan bought his first property in 2004, 2003, back nearly 10 years ago. With it, the big thing is that a lot of people don't understand that today's marketplace, I believe personally, there's better opportunity than what there was when I first started buying properties. And if I can expand upon that further, when I first started buying properties, it was Sydney. It was in a time where the market had peaked and everything was basically overvalued at the time. I bought my first property and I bought it really, really cheap when the boom hit, and from that the yields weren't what they are today. There was a lot of people hurting out there, which isn't happening today, and there was more mortgagee repossessions here in Sydney, but today I see there's a lot more opportunity as far as higher rental yields and all that sort of stuff. Being able to pick up 8% yields in Sydney in today's market in 2013, it is possible. Still buy these properties in 2013 myself. I just bought a few in Sydney myself, and there is opportunities to buy properties in other states as far as Queensland goes. There's lots of mortgagee stuff, and I always get calls from the administrators, from the representatives from the banks, from the real estate agents saying that there's properties that are here for sale. Can you help us negotiate these and sell these properties? And obviously when they sell the properties, I buy them, I win because I get a cheap property, they win because they get a sale and they get the commission. So from that, I see there's opportunities out there today. Is there any difference in what there was 10 years ago when I first started buying? I don't believe so. I believe that there is as much opportunity today, if not more, than what there was back then. As a matter of fact, I've got a number of dozens of hundreds of investors which are actually doing it in today's marketplace that I help out on a weekly basis, and quite a lot of investors that have built property portfolios a lot faster than what I did. Within saying that, investors out there buying properties at 10 properties in 12 months, 15 properties in 12 months. When I first started building my portfolio, I started with my first property in the first 12 months, and then I bought another 3 or 4 properties, and I bought another 5 or 6 properties, and built my property portfolio that way. That was because I was trying to minimise risk. I didn't have someone there to help me, guide me, and I didn't have the resources as far as Facebook or the forums or whatever to talk and network with other people. So I think there's more opportunity today to build a successful property portfolio than what there has been at any other time. You can still buy properties in metro areas of Sydney for under 200,000, houses and units. You can still buy properties in Queensland metro sort of areas for under 150,000, which give you an 8, 9, 10, 11% yield. And from that, like, if you go and read all the glossy magazines, you go and read what all the sales brokers out there have to say, they'll be telling you that you can only get a 4 or 5% return. It should be negative cash flow property. You should buy their brand new property there. They have a plan miraculously to sell you. And for me, I don't buy into any of that sort of fluff. The deals are there. Yeah, like they're out there in the marketplace. If we look at land tax, I think that was one of your questions there. Land tax is a cost of doing business. If you have a business, you have staff, you have wages, you have superannuation to pay, you have workers' comp. There's a cost of doing business. It's a running cost. You can't avoid paying land tax. Each state does have a land tax threshold, and if you do want to look at your acquisitions and purchasing them in states where you don't pay as much land tax, it is always an opportunity, and I see a lot of people asking those questions. For myself, I look at the property, I look at the deal, and I look at the numbers. If I have to pay land tax to make $50,000, $100,000, whatever the case may be, I'll pay land tax any day of the week. It's important to look at the numbers and look at how you're going to build your portfolio and how you're going to get the profit to make money and hit your goals. From doing renovations, it's important when buying a property that needs renovations that you get an understanding of the scope of works. What I do, I walk through the property, look at what's damaged, look at what's needing replacing, and put a dollar figure to them. If you don't know what a dollar figure is, you can get tradespeople out to quote on that. I've had people come out and hang out at renovations that I used to do in the early days, and they'd like to learn by seeing what I was doing myself. Unfortunately, I don't have the time to do any of the work myself anymore, so I can't have people with me to do that because I don't do it. But if you find other investors that are successfully doing renovations, you might know a handyman, a tradesperson, network to find. I've found tradespeople in all random places. If you talk to your friends and family, everyone knows someone that's a tradesperson, so just network to find the right tradespeople. And from your questions, the last one is getting the right finance. And from the finance side of things, it's important when building a property portfolio. It's the same as building a business. And building a successful business, you need a plan, you need a strategy, and you need to action that. And for me, looking at my property investing, I've taken a lot of time to work on a finance plan, and working on my finance side of things, it's understanding how the banks work, it's understanding how you look as a risk to the bank, it's understanding how the bank will lend to you and how they'll look at you as a personal risk. And everyone is different, and everyone's investing goals are different. If you just want to buy 1 or 2 properties, any bank can help you, as long as you're not bankrupt and you've got a job and all those sorts of things. If you want to build a successful portfolio of 10, 20, 30 properties, not every bank can help you, and it's important to understand questions as far as how soon can I raise equity? How do you work out your serviceability calculations? How long can I order a valuation for? Do you cross-securitize all my properties? Can I get cash out, or do you only give equity out when it comes point to purchase another property, which means, for example, I've seen people that have gone to some banks and buy a property, they'll want to extract the equity to buy the next property, and they're stuck because they can't pull out the equity. They have to cross-securitize the property, have 2 securities on the one loan facility, and they won't lend out a cash out. It's called a cash out policy. They'll only lend a maximum of $10,000 as cash, and the rest has to come from putting the property as security. So it's important to speak to someone out there in the marketplace who understands finance and is a finance strategist. Not all mortgage brokers will be able to help you, not all banks will be able to help you, and it's important to find ones that understand your strategy. From my side, when I go to the bank, ask for finance, all that sort of stuff, I go to them like I've got a business, and I say, this is my investing goals, this is the current portfolio of properties that I've got, this is what I want to achieve, these are the current loans that I've got, these are the current banks that my loans are with, these are the current values of the properties, this is my current cash flow position. Have it down the bottom so they can see that I've got a strong cash flow position, I've got a strong equity position, and that I'm good for them to do business with. And it's important to put that all in an Excel spreadsheet, so then the banks will take you serious, because there's lots of people that say they want to do things, they're going to do things, but they don't actually take action on doing things. And making sure that the bank understands your goals and they're in line with your goals, or your broker. I see a lot of people going to brokers and they'll say, go to this lender, it'll be the easiest, it'll be the best thing for you to do is to go here. And a lot of people have vested interest as far as whether it could be the biggest commission that the bank pays, whether it's the easiest thing to get happening. Is it the easiest thing for them to make a loan happen for you because they don't understand your goals and you can't buy your next property, or is it the best thing for you to actually get that loan? And the important thing is that loan is going to run the mileage for you as an investor to be able to buy more properties. So from my side, I'm in the process of setting up Zinger Finance. It'll be Zinger Finance, Z-I-N-G-E-R, finance.com.au. If you need any help from a finance side of things, we can help you out from that. Every broker that works with me is a property investor themselves, and they understand the strategy of building property portfolios. They work with investors that always have big property portfolios and know how to structure it, know how to get the loans approved, and know how to advise you as far as what way is the best way to structure your portfolios as far as that goes. So with that, I hope that answered your question, Scott. I appreciate you sending the email through, and if anyone has any more questions to ask through, you can go to the Facebook page on the link below and post questions, and I'll hop on YouTube and answer it for you. Thanks a lot for that. Have a great day.